Hello everyone, welcome in the new sessions. Today we will discuss credit creation by commercial bank. Before discuss the credit creation by commercial bank, we must know the learning objective. After finishing this topic, we will be able to remember the meaning of the term of commercial bank. We will be understand the concept of credit creations and how the bank will create credit by the primary deposits. So this we will you will be able to understand. Now, first of all, we will discuss the meaning of commercial bank. Before discuss the credit creation, we must know about the commercial bank and function of the commercial bank. Commercial bank is a company or a banking company which transacts the business of banking, which means accepting or the deposit and purpose of lending or investment of deposit from the public, and the company is repayable on demand or otherwise, or withdraw by check or draft or otherwise. So commercial bank is a financial institution which accept deposit, provide loan, investment to the publics, and is able to repay the money by check, draft or other cash, or repayable on demand. So that is a commercial bank. Commercial bank perform different type of functions in the economy. Uh, Commercial bank is present time is a lifeline of the business. So first we will discuss function of commercial bank, then we will discuss how it create more money. Function work, commercial work on the different parameter. The primary function of the commercial bank is the receiving deposit. First of all, bank receive deposit, different type of deposit. Customer open account in the bank and then they deposit money like current account, saving account, and then the fixed deposit, recurring deposit, etc. And bank also provide loan to the customers like overdraft, cash loan, and the another house loan, etc. Different type of loan bank provide in present time. The another primary function is the credit creation, because bank have very less money, and by that primary deposit bank create more money. That is called a credit creation that we will discuss in this session. Bank also work as a agency function. I mean, on behalf of the different firm, they work as a agent and agency function, and the general utility function like as a ATM provide, local facility provide, or maybe another different type of information also provide. So these are the function. The main function of the commercial bank is the credit creation. Now let's start credit creation by commercial bank. What is credit creation? First, the question arises. Credit creation means creation of demand deposit with the commercial bank on the basis of their reserve. This is called a credit creation. In creation of demand deposits, many by initial deposit they create more demand deposit. So on the basis of their reserve, that is called a credit creation. Create more and more demand is called a credit creation. Bank deposit on the basis of credit creation are two types. One is the primary deposit. The deposit of household and firms held by a bank are called a primary deposit. When bank accept cash from the customer and open a deposit account, it is called a primary deposit. Like we people open an account in the bank and deposit money, so that is a primary deposit of the bank. It means first time we are depositing money in the bank. So that is a primary deposit. Or another word we can say, when bank accept a cash from the customers in a cash form, when bank accept a from the customers in, and then that credit in the account of the customers, so that is a primary deposit. Secondary deposit or derivative deposit means that was created by the commercial bank, or called a secondary or derivative deposit. Means from the primary deposit, bank create another deposit that is called a secondary deposit. Like for example, when bank grant loan to the customers, instead of giving cash to the borrower open a deposit account in the name and then carry money to the account. This is called secondary or derivative deposit. Okay, and because it is called derivation deposit because it has been derived from the loan transaction of the bank and creation of secondary deposit. It is called a creation of credit. Like for example, we will understand with the help of example, but here I want to clear you that when we people deposit money in the bank, like for example, we deposit 100 rupees in the bank, and when any other persons take loan, then bank will not provide loan to the customer in a cash form. He will credit amounts in the account of the customers in a loan form, and then he can withdraw on behalf of the customer experience or a bank experience. Bank assume that all people will not withdraw money on the same time. They will withdraw on the different time. So bank will not provide loan in a cash form to the customers. They will deposit in the account, demand deposit. So that type of deposit is called a secondary or a derivative deposit because it is created by the bank. It is not a primary deposit. Primary deposit is 100 rupees. But by the 100 rupees, bank create more money in account of the customers. Like for example, 100 rupees bank will keep some amount in the bank, and then the remaining will provide loan to the customers. Then again, from that amount, bank again provide loan to the another third customer. So in this way, bank create a secondary deposit or derivative deposit. So this type of deposit is called a secondary deposit. Or that secondary deposit is a process that is a credit creation. It means bank create more credit from the initial deposit. Now, how create credit by the commercial bank? The credit creation by the commercial bank, that process. Let us now explain the process of credit creation by bank, taking an imaginary example. Bank will keep only some fixed proportion of their deposit cash, like maybe 10%, 20%, 7%. This is fixed by the RBI, okay, which is known as the cash reserve ratio. Present time it is known as the LRR, legal reserve ratio. It is the total of the CRR plus SLR. So, and the remaining amount they keep as a percentage of LRR in the bank, and they lend, invest the remaining amount, which is called assess reserve, the entire banking system, and lend and create credit up to a multiple of its original excess reserve. It means they will keep that amount, and the remaining amount they will provide as a loan to the customer on the account of that bank, that customers. So in this way, they will create multiple amount credit. So that is a credit creation. Bank, by their experience that already I told you, know that all depositors would not withdraw their money at the same time. It means on the experience of the bank, they know that all customer will not withdraw money at the same time. They will withdraw on the different time. So therefore, after keeping some minimum percentage of total deposit, bank give loan from the rest of the deposit. Mean after keeping some minimum deposit that is depend on the LRR, it is fixed by the Reserve Bank of India. It means bank will keep that reserve, and the remaining amount they will provide loan to the customer. So by this way, the bank will create more credit by the initial deposit. Now, what is legal reserve ratio? It refers to that legal minimum fraction of deposit which the bank are mandated to keep as cash with themselves. It means uh, legal reserve ratio is the refer to that minimum fraction of deposit, mean minimum percentage of that deposit which bank are mandated to keep as cash with themselves or a central bank. LRR is fixed by the central bank and which the commercial banker accept as the legal bonding. That means it is not the option of the bank. The bank will keep their own amount as per their own choice, but it is fixed by the commercial bank, and it is a it is fixed by the RBI, and it is legal bonding for the commercial bank. LRR have two components. One is the CRR and second is the SLR. CRR is the cash reserve ratio. It is the rate at which commercial bank keep reserve with the central bank. And SLR, statutory liquidity ratio. It is the rate at which commercial bank keep reserve in their own bank. It means both are kept by the commercial bank in cash in the central bank or in their own bank. On basis of that LRR, bank will create a more credit, that is called a credit creation. Total money creation, like for example, we are taking the process or a formula of that, how bank will create more credit. The primary deposit into 1 upon LRR. LRR if 10%, then by 1,000 rupees is the primary deposit, bank can create 10,000 rupees. It means if your primary deposit is 1,000 and LRR is 10%, then bank can create a more credit creation by 1,000 rupees is equal to 10. In 10 time bank can create a credit. So that is a credit creation 1 upon LRR. Primary deposit into 1 upon LRR. LRR is the legal reserve ratio. So in this way, bank can create a more credit. This process we can show with the help of one example, that here credit multiplier is also called a credit multiplier. So 1 upon LRR, LRR is legal reserve ratio and it is equal to the CRR plus SLR. Now this we can explain with the help of one example. First we are taking as a bank ABC, maybe the bank or maybe the customer, the process cycle. Additional deposit, primary deposit is the 1,000. Then bank will provide loan to the customer 900 rupees and the required legal reserve ratio is 10%. 100 rupees he will keep in the bank and the remaining he will provide loan. Now this 900 rupees he will not provide in a cash form, so that will become a additional deposit for the bank, and out of that 900, 10% he keep reserve 90 rupees and 810 rupees provide loan to the customer, but again it will provide in the account of the customers, not in a cash form. So this 810 rupees become additional deposit for the bank, and out of that bank will provide additional loan 729 because 81 rupees he will keep reserve in the account. The remaining 729 will provide loan. So in this way, he will keep 1,000 rupees. That is, will take many cycles, not only the one cycle. So that's we will only show 2 or 3 cycles, not all. In this way, bank will reserve 1,000 rupees and provide additional loan to the customers 9,000 rupees and the total additional deposit which is 10,000 rupees. So this process goes on continue until the total volume of derivative deposit created by all banks will become a multiple of the initial excess reserve. It means it continue up to this process when the additional deposit become 10,000 and 9,000 and 1,000 is the deposit. So this way bank will create more credit. So this is the process of credit creation and credit creation by the commercial bank. It is the major function of the commercial bank, the credit creation. Thank you.